Good evening, everyone, and welcome to Admiral Markets webinar session recap 5th of October 2015. My name is Nenad, and we will see where the currencies will go. And I have prepared some setups for you to see that, and we want to see that these setups will give us pips. Last week's setups gave us 155 pips total from euro-dollar trade, and all other trades were very close to being qualified, but unfortunately closest one, which was almost qualified, was Australian dollar for a good number of pips, but it came 4 days after our webinar. So previous week was very good. One trade we got from euro dollar, a swing trade, and it was pretty much very successful. And also on pre-NFP on forexstreet.com I published euro dollar analysis, which exactly gave us good rejection, more than 120 pips at this point. And somehow that was maybe also euro dollar was definitely the trade of the week. So before I begin, as always, our standard is disclaimer stating that all online education materials are developed by Admiral Markets as Estonia for a global audience. And if you want to get a corresponding information on charting conditions and any other detail, you should visit www.admiralmarketsglobal.com, then select your country of residence and contact an appropriate entity. Risk disclosure statement: citing all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And Admiral Market UK Ltd takes no responsibility for information accuracy. This is my opinion, and in no way it represents the actual suggestion for a trade. These are not MUK's opinions, and the website is not the .co.uk website, but the globalnews.com website. Forex is risky, and this webinar is for informational and educational purposes only. So, of course, you should download Supreme Edition, especially if you are trading a live account. You have a lot of tools available there. You can do that by logging into Trader's Room, and you're definitely trading with officially best MT4 broker. Okay, Admiral Markets. So, all session recap trades and analysis is done with Camarilla MACD. How we do it? Usually we need to give price a breathing room. We enter within 5 to 10 pips of the predicted level, and we do that if it's in agreement with your system. You should respect your stop loss. You should also add the spread to your stop loss, okay? You take only one position, whichever hits first. So either position buy or position sell, or alternative buy or alternative sell. Those are the positions we are counting on. Okay, so first position which is hit, we trade it. First touch of the zone, we trade it, because first touches of the zones are most profitable ones. Position trades are trend trades. Alternative trades are called counter trend trades. But if you see that there is a breakout trade and scalp trade, you can down the trade independently of position or alternative trade. That can be counted as a second entry. Depending on the time and volatility, usage of trailing stop is highly recommended. I'm not recommending to use trailing stop below 20 pips. We never ever close a trade without at least 20 pips of profit. So you need to see how the price is going, and sometimes, and very often it will be more than our minimum number of pips. These setups are valid for today, tomorrow, and sometimes day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. Those are calculated by historical levels and Camarilla. You can add these levels to your system. So pay attention to my Twitter updates. It's also very important to pay attention to Twitter updates. Pips pool is the maximum available number of pips you could have got on recap entries. Okay, also very important. Now, as far as last week results are concerned, this is what we basically had. Euro dollar 155 pips. Very good movement by euro dollar. Okay, we got excellent entry on euro dollar. Then we had a trade which wasn't qualified, unfortunately, pound dollar. Then unfortunately Australian dollar also didn't qualify. Dollar yen didn't qualify, pound yen. Closest was Australian dollar. 4 days later it was good for 50 pips. But as you can see, it came 4 days later. So basically that is why we missed it. It was 1 day after our last due date, I need to say. So that is why we unfortunately made, well, I cannot say unfortunately, we made a single trade, but that single trade was really more than enough to make your week, really to make your week very, very positive. Especially if you traded Friday's euro-dollar trade. Friday's euro-dollar trade, this is pre-NFP analysis, and that was basically that we had 12.10 breakout of euro-dollar. I printed it here. This was X cross confluence, and I told you that you can sell it here around 13.25. What happened after NFP is that NFP was very, very good, and I told you that 135, 13.25 could be target, and we could use it as another sell into rally. If you made sell into rally, you could make a lot of pips on this single trade also. Okay, so guys, this is what I had in mind, of course. And now euro dollar, last week it was definitely best trade. 12.60 sell, 13.00 stop loss here. You can see how big was the sell. Okay, a lot of pips. Then breakout sell 10.05, which unfortunately didn't happen. But look at this drop after our webinar. As you can see, pound dollar wasn't qualified. I was going to sell it, but a little bit above, not there where the price was. I wanted to sell it really at a better price. Australian dollar also, look at this Australian dollar, very close to our entry, but unfortunately our entry came here. Now, if you sold it here at this spot, you could have made also good number of pips. Okay, it was like very, very close to 70-40, 70-50, because we are having 10 pip buffer. But I always say, guys, if you see the zone, then you can give it a little bit more buffer, let's say 5 pip additional, because very often the price will hit the zone and reject. But an average pip buffer is 10 pips. So 70-50 to 70-40, it could have been a sell. But unfortunately, you can see, and when the level was hit, it was a day after, unfortunately. Dollar yen also didn't qualify. It was something like range. But if you followed my tweets, you could have noticed that there was a tweet about further dollar yen sell. That is why it's important for you to really follow my tweets, really, because sometimes you can see a good signal in my tweets. You need to read between the lines, guys. You need to read between the lines. Now this week, and yeah, pound yen, indeed, dragon. So this was it, 184.20. You see the price didn't pull back to my entry zone, but if it was really, it could have been a huge sell, because afterward the price dropped for 300 pips almost. So unfortunately we didn't have a pullback on pound yen also. But the trend was confirmed, definitely downtrend. This week, euro dollar, of course I would sell it if it comes back to 13.25, 25 pip stop, 12.00. Now this is a buy entry on euro dollar. If you want to get in a buy position, remember that your stop loss is like 11.40 plus the spread. So there might be some rejection from this level. As I'm saying, this entry is happening now. Recommended risk for every trade is always fixed 0.5 to 1% of a risk maximum. Your overall risk size should not exceed 2% per day, not per trade, per day. So position, this is now entry on euro dollar. Now 40 pips is stop loss, 13.20 is possible target if we get it. I'm not sure that price will move a lot during these are late hours, but we should definitely be patient and see where the price will go and how the price will behave, definitely. Okay. So guys, pay attention to this, pay attention to this. This is a setup which can be good, but as I'm saying, this is counter trend setup. Treat it as a counter trend. Do not forget that this is counter trend setup. Okay? Do not forget it. Counter trend setup on euro dollar, counter trend. And it's now, this is an entry, 1140 stop loss, 1320 target. Okay? Let me show you now. Okay? So this is also done on this one, and always with a proper risk. Okay? And always with a proper risk here. Okay, here. Okay, I always give some room to go down, to go with stop loss, and this account is connected to other account, institutional. Okay, here it goes. So let's see. Always within your risk limit, guys. Always within your risk limit. Do not overexceed your risk limit. 4 hour, if we should believe 4 hour time frame, we have uptrend trend line, but we also have a momentum candle, which is not a perfect Marubozu candle, guys. Usually we do those trades on 1 hour, but if you see 1 hour is very close to our support at this point, and 4 hour is also. So if you use the concept of high momentum trading, okay, somewhere like this, it's now in between 78.6 and 88.6. Okay, it's in between. So we need to see if the price will be rejected. If it's rejected, it can give us good number of pips. If it's not, it will be a loss for only 40 pips. So this is probably final frontier for bulls. This is indeed deep retracement. And if retracement is successful, it can be a good sign for intra-week bulls. But as I'm saying, main trend is mainly to the downside. So this is counter trend setup, alternative trade. Main trend is to the downside. As you can see, 1325 region was rejected from Friday when I did pre-NFP analysis on euro dollar. So let's wait and let's see how the trade will develop. So that's it. Now at this point, this is basically euro dollar setup. Pound dollar setup, again, I would like to sell around this level. Stop loss is here, but we also have a position buy trade. 51.30, 50.80 stop loss, 52.50 is the target. So if we get a sell position on pound dollar, it should be around 55.50. This is the same what I had this whole week, and if you traded 55.50 rejections, you could have been in a good profit. The thing is, because if you read my interview today, I'm not sure that you read my interview with Forex Street. I can show you. The thing is, I think that there will be no rate hike this year, probably on US dollars. So the thing is, let me show you the link and you will see why I think that. So those are fundamental reasoning behind it. Okay, this is the link and it's on Forex Street. And I clearly stated I don't expect Fed rate hike in 2015. Risk aversion might pick up, indeed. So the main problem is that I have warned about QE4. Really, I have warned it a lot about it. So QE4 is a possibility. If stock markets continue to tank, that means going south, Fed will probably start talking about QE4. If stock market crashes, then the only thing which US can do is back to QE for lifeline support. It's always like that. Because the thing is that US cannot use their monetary policy to drop central rates. It's critical for them to keep growing their economy. Okay? They have good employment numbers, but inflation is not at 2%, and last NFP number was also far from expectations. So there will be some war in between, will be a rate hike, no rate hike. I think at this point that probability for a December hike is decreased, definitely, okay? Now also considering pound, BOE will not hike, okay? It will not hike if Fed does not hike too. That is why I'm mostly bearish on pound dollar. Okay, that is the reason for my bearishness on a pound dollar. The only thing I can see pound jump, at least from intra-week perspective, is this level. Around 51.34, it's getting close. But if this level is taken well, 50.00 can be tested. So we could try to have also a small counter trend opportunity on pound dollar indeed. So that is why I see that particular level very important for a pound dollar. Okay. So guys, pay attention to that. Definitely pay attention to it. Also, what is important to say is that Australian dollar, if you want to trade it, this is a probable trade after tonight's cash rate decision. Be very careful about it. Okay, I expect that there will be maybe a rate cut, but there could be a big possibility that Australia statement will be dovish, really dovish. So because of that, sell in rallies is what I see at this point on Australian dollar. Only sell on rallies, okay? Before, if it gets to 71.25 to 45 region, okay, there could be a good sign for another sell. Look at historical sellers here, okay? Look at history of selling here. And indeed, spot on. Left head, possible right shoulder. So we have multiple confluence on Australian dollar. Indeed, multiple confluence. Left head and a possible right shoulder. So that multiple confluence, of course, I also explained it on my analysis today. Okay, on Australian dollar. And at the time I was doing the analysis, you see price came within very close within our POC and drop. But I would like to see it again at this region. So this is my spot to sell again. Okay, and probably if this level holds here, we could see a drop over 69.60 initially. Okay, so that is why I think that Australian dollar could drop. Technically and fundamentally, it's bearish. This is a correction in downtrend, and you can see this left head, right shoulder pointing out that it might be a drop on Australian dollar. Okay, next one, dollar CAD. I'm looking to sell around 32.50 with this stop loss and buy around 30.10 with this stop loss. Targets are 30.00 for a sell and 32.50 for a buy. Okay, let's see. Dollar CAD, 30.10 for a buy. I will zoom in. 30.10. It's a deep retracement now. Very, very deep retracement, guys. Zoom out. Look at this. Around 30.10. Look how many rejections is in the region. And if you go with even deeper swing, here it sits exactly at 88.6. Very, very close, almost exactly at 88.6. So I want to neglect this last low, and I want to buy exactly around that low, because in the now moment, this is the only history here which is hinting that the price might jump. Yes, 30.90 is the price, a little bit below. This is the region also, 30.60. But 30.60 is not having the same strength as 30.10. Look at this buying at this zone. So 88.6 confluence with most obvious swing prior to this swing can be good. I'm not saying that it cannot reject from this level now, but I would rather wait for a better retracement. And potentials are good for 30.10 long. For a sell setup, I want to see at 32.50. Okay, this is very important, 32.50. Okay, let me do it like this. Okay, I will print out a new one. Okay, if we get a pullback, let's say from this level, exactly, because this is bullish candle, 4 hour. 50 retracement sits exactly there, and also there is double top. If this happens, this double top should reject the price initially at the first touch. Placing a steep line here, you can also see that it's making an X cross around 32.50, which is natural support resistance level. So this is the zone for a sell here, having in mind that there is also a wick here and there, so this is the zone for a sell trade. 32.50 to 60, I can say I would also look for 32.40 to sell. So in between 32.40 and 60, you could see a sell towards lower levels. Stops are for a sell, it's 33.30. For a buy, it's 29.50. So let's see if we get some sort of rejection here. New Zealand dollar, final slide for today. And then you can ask me questions for other pairs. 64.20 long, 63.80 stop, 65.50 target. Okay, let's see. New Zealand dollar. Strong uptrend with W pattern here. Big W here and here with an ascending trend line. This is uptrend now on New Zealand dollar. But I want to see a pullback in order to buy a trade. For a buy position, we should put everything into account. This is our most obvious swing here before this one. So let's use this one. Okay. Deep retracement, previous breakout retest point. Watch the chart. So this is breakout retest point. Usually after breakout the retest is successfully confirmed, next retest is also positive. So this is first retest. Now if the price heads down, that will be second retest. So my position for a buy trade is 64.20, 63.80 stop, 65.50 target. Pay attention, guys. We have deep fib confluence here, and here is your breakout, retest, continuation. So probably next retest will be good for some amount of pips. That is why I always love to see historical buyers within the zone. Historical buyers and sellers within the zone are always good to have when you're trading price action. And you're learning about it on our price action trading school. So that is my view on this week's setups. Now you can also ask me for other setups, and I will be gladly sharing it with you. So do you have any questions? Now I will roll the slides again. So we are having a buy trade on euro dollar at this point. Pound dollar, Australian dollar. Yes, questions. Okay. Ilya and others, I missed the questions. Hi, Nenad, any idea where support is on pound CAD? Darshan, good. Dollar CAD is also happening. Alec, dollar yen, great. Pound yen, set up. Okay, guys. Let's see now. Okay, pound CAD first. Let's roll the slides fast and then I will sell entry on New Zealand. I don't have at this point sell entry then. Then we had sell entry 2 times previous week. We had 64.10 and 64.30, and those sells were happening for, I don't know, 3-4 days, and it was good for 30, 40, 50 pips initially, and second one was also good for, I think, 50 pips. Now we don't have New Zealand dollar. I don't have it. The only thing now I see, I want to buy it because it's a pretty much bullish on intraday and intra-week. If I spot New Zealand dollar sell entry, I will go with Admiral Markets daily analysis. But at this time, I'm seeing longs. Pound CAD, any idea where support is? Yeah, let me show. Okay, dollar CAD is also happening, Alec is saying. Let me see dollar CAD. It's not happening, Alec. This is buy position, this is sell position. So we are not having a position on dollar CAD at this point. Pound dollar, I didn't pay attention to pound dollar. Yes, it could be. It's very close to our POC. So, but we also have euro dollar, guys. So please go within your risk limit. You don't want to trade to over risk it, please. Do it with boundaries of your risk limit. Okay, pound CAD, first question. Pound CAD, I need to pull the chart on pound CAD. Okay, let me see. Pound CAD, pound New Zealand. Where is pound CAD? I reminding myself that I need to sort this out. I really didn't pay a close attention to this pair lately. Okay, Darshan, this is your head and shoulders on daily. This is head and shoulders on daily pound CAD, so this is not so good. Look, this is your retest on daily. It's already playing out. So most obvious support on daily is this one here. Okay, height of this one was 97.20 and low was 90. So it's 97.00. So 96, 95, 97.00. This could be your support. So at this point, and this point, Darshan, it's currently in a head and shoulders trade. So this is what you should have done here, either here or there. You know how I teach also to trade head and shoulders. Somewhere at the top of right shoulder could be short. But if you're late, then you can go with the neckline, and you can see neckline here. It's broken, retested, and this is now breakout, retest, continuation. So first support is 97.00, of course. Daily support. Initially, you also have support here. Interim support is 97.85, also here, initially. So pay attention to 97.85 and 97.00. BT is saying that he entered my Australian dollar and got that 30 pips. Well done, BT. Okay, well done. I didn't trade it, to be honest. Okay, so well done. Hi, Nenad, can you show again your first page? Mario Filipovic. Yes, Mario, I will do that just after we finish with the analysis. MJ was saying no sound. I don't know why. What was pound yen analysis, dollar yen, and a question. What was the price at break of neckline? This is your price. 2.015, Darshan. Sure. Here, 2.015. 14. Okay, this was it. So Darshan, this was a breakout retest trade here. Okay, next question. You shorted at 2.015. Well done, Darshan. Well done. That's great. Okay. Pound yen or euro yen? Well, I would prefer to go with, at this time, I don't like euro yen and pound yen, but I will do the analysis. Pound dollar is indeed in our buffer zone, as I said, but we are having euro dollar trade, so consider it a very low risk trade, guys. Dollar yen, indeed dollar yen. Okay, still dollar yen is ranging. Do you see where the price is at this point? M pattern. And M has been sold into, then look at this. I don't trade, and I advise you not to trade dollar yen at this point. Now the price is having a heavy range. Look at this. I will connect it for you to better see the price. Like this. So this is a running triangle with well-defined range here. Now look at the confluence here. It's very, very close to 88.6. And look how the price is rejecting from 88.6. Look at the power of 88.6. Look, rejections, trend line, confluence. Look at the downside. Same, it's ranging. So I advise you to stay out of dollar yen. And on daily chart, this is bearish pennant still. Bearish pennant. So this is bearish, but it's also bought from the bottom of the pennant. Okay. Euro yen, if it breaks the range, it will be an uptrend on 4-hour time frame, indeed. So if it breaks above this line, 121.60, it will be in an up range because it will negate M pattern. And it has the possibility to retest upper zones, indeed. But at this time, it's ranging and it's bearish. Euro yen. Euro yen is perfectly correlated with euro dollar. That is why I restrain from euro yen trade. Let's see correlation table. Admiral Markets live account holders have unrestricted access to correlation matrix. Okay, so let's see it, guys. Euro dollar and euro yen last 100 bars on 4-hour time frame. It's a hell of a price action. So last 100 4-hour candles, guys, think about it, have a correlation of plus 90. Wow. Moving the same way on 4-hour time frame. What does it tell you? Why do we need euro yen analysis if we had euro dollar analysis? 4-hour time frame perfectly correlated with euro dollar. So I would sell on retracements. I would sell on retracements. Where the retracement will happen, I really don't know. Judging from previous swing high to low and fast analysis with, let's say, quick price action, I would probably wait for a deeper pullback towards 78.6 if there is any pullback. But euro yen and euro dollar are positively correlated. They're moving the same direction. Alec is asking, where can I get correlation table? If you download Admiral Markets Supreme Edition, you will have all of these correlation. If you are a demo user, it will be restricted for only 30 days. If you have a live account, then you have unrestricted access to Admiral Market Supreme Edition. So that's Supreme Edition, guys, Supreme Edition, Admiral Markets. A lot of tools with that, not only correlation table, you have a lot of tools covering. I have also explained it in one of webinars about Admiral Market Supreme. Another question. Euro, yen, pound, dollar, pound, yen, okay. Sell on rallies, guys, definitely clear with pound yen. Sell on rallies. Now the thing is, if we get a previous retracement, next rally could be around 183.60 if we get a price. Somewhere here. Because I told you to sell from this point. Now the price has made the first swing from that point, and now it's trying to make here. So if it gets here, I would look to a sell, 183.60 region. Okay, so that is why I'm paying attention. Then dollar Swiss. Dollar Swiss. Correlation, euro dollar, dollar Swiss. Minus 84. Very negatively correlated with euro dollar. Guys, same thing. If you're buying euro dollar, you will lose a trade if you buy dollar Swiss. So having euro dollar position, you don't need to have dollar Swiss position. They will negate themselves. Okay? So you should trade either euro dollar or dollar Swissy. Dollar Swissy was a buy trade, and that buy trade happened today. Buy trade happened today. Rejection from this zone here led to another swing to 50, so from 61.8 to 50 and then up. So the only thing is, if it goes up, euro dollar will go down. But now if you're in euro dollar trade, that is the same. You will be double exposed to dollar if you enter both time euro and dollar. So effectively you will double your risk. Euro GBP. Nasty range on 4 hour. And possible buy on pound GBP around 88.6. A lot of buying here, a lot of buying here. So 73.60 could be a buy spot for Euro GBP. But you see 4 hour is not very clear. It's really ranging a lot. I don't like this price action. This is very, very nasty price action. A lot of range here, a lot of range. EURUSD. Giant head and shoulders on 1 hour time frame. This level could be a retest. This is not a real head and shoulders, but it can be deemed as head and shoulders. This could be right, but this level could reject it again. EURUSD is bearish. Then even 4 hour is screaming down, but I don't like price action. I don't like this bang up down up down. It's whipsaw. I don't like it, but it's bearish indeed. Don't trade EURUSD now. You have bid rate announcement soon, So stay away from it. Movement will be huge on euro dollar, on euro AUD. Okay, guys, do you have any questions? We are now currently in euro dollar trade. If you are within the risk limit, it's also pound dollar trade. Okay, I don't see any questions, so I think everything is clear. And Mario was asking for a first slide. Yes, indeed, this is my first slide. Okay, this is my first slide here. You probably thought about this slide. Jeff is saying thanks, Nana. Thank you, Jeff. You're very welcome. Mario, is this the slide you wanted? Ilya was saying, hello, dear Nana. This time I'm on time. Hello, Ilya. I'm very glad that you're on time. Yes, Mario is asking for a checklist. This is the checklist, indeed. Sometimes it's not 10. Sometimes you will see 12, 13 pips. So be a little bit relaxed with our counter, of course. Arne is saying, thank you, Nenad. Okay, guys. I think, can you roll slides? Lucas. Sure, Lucas. I will roll the slides. Euro dollar. Ella, thank you, Nenad. As always, it was great to attend your webinar. Happy trading. Thank you, Ella. I really like having you here, especially that you're a novice trader, so it's good. Dan, thank you, Dan, and thank you guys for comments. Have a great week, many people. Indeed, I wish you the same. Pound dollar, I'm learning a lot, Ella is saying. You explained the best way how to trade Forex. Ilya is saying, thank you, Ilya. Thank you. If one day I become a millionaire, I will send you money. Well, to become a millionaire, it's really sometimes a string of the luck, you know, because string of the luck is also Lady Luck needs to have a good hand on us to basically become, because, you know, millionaires are usually born. And if you want to be a millionaire, you need to really trade a big account and raise it to that point, or you need really to have a luck with some of the trades. But, you know, $1 million is something where serious money can be made without a single thought of a risk. I know how I would trade $1 million account because it's a simple, guys. Remember this. For example, trading $1 million account. Think about that you open only one lot on $1 million account. You don't need stop loss, and your trade will eventually be in a profit. Now or later, it will be in profit, because on one lot account, on one lot trade, you cannot lose $1 million account. You don't need to have stop loss. Easy, right? Well, then what's the charm of trading if you're not trading it for money? For me, I listen to Darshan. Darshan is a very smart person. He is one of our attendees. He's coming from India, and Indians are known to be smart by nature. And the thing is, he once told me, try to trade small accounts and try to bring smaller account to big figures. And that is what I'm currently also trying to do. That is the charm of trading. Trying to raise a small account to 4 or 5 figures. That is really a charm of trading. It's not always trading already built account. It's also how to raise $100 or $200 account to $1,000, $2,000, $5,000 account. That's good. 7 figures. Darshan, well done. We will talk about that again. Definitely. What do you think about luck? Does it count? If someone has no luck, can he somewhat beat it? No, Ella. You just need to be caressed by Lady Luck. If Lady Luck embrace you, you will feel it. definitely. But you know, sometimes our small trades are really bestowed by luck, and sometimes our high risk trades are completely reversed. It sometimes I have really experienced through my trading career that if I open a small trade, it's usually a whole lot of pips in profit. And sometimes when I open a stronger trade with a little bit more of a risk, it's a stop loss. And that is why I have developed, you know, that is why I said, okay, always use same risk, because your stop loss is not fixed, but your risk is fixed. So even if you're trading for a smaller account, you still can feel the joy of trading. And that is true, Darshan, indeed. Try to bring smaller account to big figures. It's also a nice way to trade, because that way really you're stress free. One of the endeavors I'm currently on, so we will see. Thank you guys for listening. I really appreciate your comments. And Mario is asking another question. What kind of information we need, what we have to analyze, and so on. Mario, try to attend. You are probably new to this kind of webinars. Try to attend my analysis. These are basically how price should behave. Watch it, please. And if you're new to that, to this kind of trading, please attend my price action trading school webinars. Darshan saying, if you do it, tell me, go meet in Monaco to gamble everything, like to gamble out everything. Yeah, we can do that indeed. Thank you guys. I really enjoying here being with you. Thank you, and I will be here with you soon as always, guys. Cheers. Yes, we will go on yachting, Darshan, definitely. Cheers, guys, and as always, trade safe. And I mind you, pay attention to Australian dollar movement today and tomorrow, and whole this week. I will be publishing the analysis. Sign up for more webinars. Cheers.